Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and breaks them down into bite-sized pieces. Today, we've got some complex stuff, but we're going to go over everything in detail. And really, it all comes down to this. How does the traditional market overflow into our market, and how will it affect us moving forward? Plus, we're going to take a look at the Bakkt wallet. And I'm going to show you exactly why I was wrong about Bakkt and what it is going to do for the entire industry, and how this could potentially lead to mass adoption because it's so easy. I'm pretty sure my mom could use it. So let's break in. Before we start, let's do a little housekeeping. There was a video yesterday that we went over called "The Crash is Coming." This is from Robert Kiyosaki and the economist Stephen Davis. And what I had talked about there was we looked at a lot of different things, but we also looked at what I consider is the new savings account, which is gold, silver, Bitcoin. And when we talked about that, I had a lot of comments about Peter Schiff and how I should bring up Peter Schiff and Peter Schiff and Peter Schiff. And I just want to make mention of something, and that is that store of value to me is really it's gold, silver, Bitcoin, and land. But just for ease of use, we just talk about these three things. Now, Peter Schiff, personally, I actually like Peter Schiff. I think he is a tremendous marketer, and he's done a great job with using gold, which we're taking a look at here as far as price action and what he's done with it. But the problem that I have, just with his message, I mean, not the person himself, but the message that he conveys. And that is that gold it's been around for thousands of years. We can't deny that. It's a good store of value. And moving forward, I see Bitcoin and gold kind of like Batman and Superman, if you can look at it like that, as far as a store of value. The problem that I have with Peter and his message is that he just poo-poos all over Bitcoin like it shouldn't be used. And that is, I think, a tremendous mistake. So if we can look back, and this was a website that I found that on macrotrends.net, which looked back, I mean, all the way back to the 1915. Where gold was $488, then it was $299, and it bounced up. Even 1980, it was pretty high. It was over $2,000. So congratulations for gold. But the problem with Pete is that he keeps talking about how you must only get into gold. You must only get into gold. And you have to understand that message is tired, and the reason why he does it is because he's heavily invested in gold. So why wouldn't he say that? Now I think he truly believes it. But the thing is, if you take a look at gold, and let's just take a look at when. I'm not even going to go to 2010. I'm going to go to, let's say, 2000. If you invested into gold all the way back in 2000, which would be pretty good for you, right? 20 years ago, it was at 382, and now it's at 1700. So you're looking at what, a 5-6x gain. So congratulations! In 20 years, you've gone 5 or 6x. Okay, great. But I just want to show you something. If we have anybody here who's like, gold is the only answer, gold is the only answer. There's a website called 99 Bitcoins, and it goes back all the way to as far back as I can see, as far as what Bitcoin was worth in 2010. On CoinMarketCap, or what I call Binance Market Cap, you can only go to like 2013, 14, something like that. So back here, it was 6 cents. Right now, it's about $10,000. So with Pete, with him just constantly bombarding and people and saying Bitcoin's going to go to zero, Bitcoin's going to go to zero, Bitcoin's going to go to zero, it's the same nonsense, and I just don't understand why people still listen to that. And I think it's a disservice, and I don't want to really. I mean, I'll talk about it again, but in my opinion, Peter is just a great marketer, but he has done financial malpractice to all the people that he has talked to about Bitcoin. And that's all I'll say about that. So let's move on to the real story. So first up, Powell says an economic recovery could take until the end of 2021, but doesn't see a full-blown depression taking hold. And I'm not going to read the whole story. Here's the highlights, okay? While economic indicators point to the worst recession in nearly a century, Fed Reserve Chair Jerome Powell doesn't expect a prolonged Great Depression-style slump. Of course not. I think it's going to be recession-style, but not depression, not as bad as that. The central bank chief told 60 Minutes he sees the second quarter bringing the GDP down as much as 20 to 30%. So January, February, March, the first quarter, April, May, June, the second quarter, and then August, September, October, third. Let's see. I expect, it to go down, but whatever. But he talks about, and also unemployment will likely peak around 25%. And this is a huge number. Right now we're at 14.7%, and that's going to increase by 10%. And that's just the ones that we can count, not looking at the real-time unemployment, which are people who have just given up looking for a job. Rapid government and central bank aid helped avoid a depression, Powell said, adding the Fed will issue relief as long as necessary to bridge the virus threat, which means that the Fed's going to do whatever they can. They're going to throw the kitchen sink at it, and they're just going to make it work. And that is a great thing for liquidity. I don't know how it's going to work for solvency as far as keeping these zombie companies afloat. I think some of these companies need to go down, and they shouldn't be bailed out, and they should go through bankruptcy because that's what the free market usually does, and it shouldn't be propped up as much as it is. But that's just my opinion. Let me know what you think in the comment section. That's just how I see it. And lastly, Powell sees growth resuming as soon as the third quarter, but uncertainty surrounding the coronavirus trajectory could push a full recovery to the end of 2021. And that's the big thing, the crux of it. How long is it going to be before we can actually see some huge recovery? And this question was answered, I think, beautifully by Alliance's chief economist, Mohammed El-Arian. And he's my go-to guy for like really bringing some sense into it. So what he's going to talk about first is his thoughts on the comments that Jerome Powell just said. And then he's going to talk about, when this is really going to actually happen and 3 criteria. So let's take a listen.
So there wasn't anything new in terms of him saying the Fed can do more. It certainly can if it wants. What was new is he put specific numbers to a couple of things. One is the depth of the contraction this quarter. He talked about 30%. And secondly, the unemployment rate, where he talked about 20 to 25%. And that shows convergence now as to how bad this quarter is going to be. Where there remains disagreement is how quickly the recovery thereafter and how sustained. And his point was that you need things to go well on the health side and the policy side in order for us to have a quick recovery. Otherwise, to quote him, it will take time for the economy to gather momentum. And I think that's absolutely right.
Right. So take momentum. It's going to take some time. So the $10,000 question, or I guess it would be the $10 trillion question is, the traditional market keeps going up. Will it continue this to happen, or should everybody sell now because the bottom?
Continue to move higher. Have you changed your thinking on the overall ability of the market to go higher?
So, Joe, we are in the third very distinct phase. For the last month, we've basically gone nowhere in terms of the S&P, with a lot more volatility building in the last few weeks. That follows, as you pointed out, early March the 23rd, very sharp fall, and then a partial recovery. And the question now is, how long can we stay in this phase?
So before we move on, take a look at this graph. This chart looks surprisingly like what we talked about as far as the charts from 1929 recovery, 2000 and 2008. I'm going to show you this was from Kimball Charting Solutions, and they pretty much just laid it out. Look, they said, we're going to look at 2001, 2008, because 2001 was the dot-com bubble, 2008 was the housing crisis, and now we are over here in 2020 into this financial downturn. So they said, look, it's the same thing. There was a huge amount of growth in the economy, and it peaked, and then we had that dot-com bubble just burst, and it just dropped down. There was a little bit of a bump, 50% retracement, and then it went down to the floor. Same thing happened in 2008, huge economic upturn for years and years and years, and then there was a big pop, which was the housing bubble. Most of you have been around for that. And then that dropped to the ground. There was a little bit of a retracement, came back up, and then boom, all the way down again. And the same thing looks like it's playing out. However, the big thing that I saw here was 50% retracement levels. And we're already past that right now as far as the S&P. So what does that mean as far as moving forward? Let's take a listen.
We need to break higher, and that's what you're betting on if you think stocks are going to go up, is either a significant improvement in fundamentals, we reopen and we reopen well, or policy actions that are meaningful. The Fed buying a lot more high yield, for example, is a policy action that would be meaningful for stocks. Or third, an improvement in the system. US-China tensions come down. the global economy recovers.
Okay, so right there he's saying it like this. This is what the three things, one of these things has to happen. Not all three, just one of these things. First of all, the economy has to reopen, and it has to reopen big. Not just like trickling of 10, 15%, 20%, but go to the maximum as much as possible. And for me personally, I don't see that happening right away, especially if you look at airlines, you look at hotel, you look at travel, restaurants. I think there's going to be a push initially, but then it's going to slow back down because people are going to worry about the coronavirus yet again. That's the first thing. I could be wrong. Let me know what you think in the comment section. That's just how I see it. The second one is that meaningful Fed policy action. And I can see this because the Fed is buying up everything. They're buying the index. They're buying junk bonds. They are stimulating, for stimulation packages and just printing money. So they're doing a lot of things. And like they said, they're going to throw everything like the kitchen sink. So I could see that one happening. But the last one, where he says China and U.S. tensions de-escalate, I'm never 100%. Let's just be honest. No one's 100% all the time. I'm 99.999% sure that these tensions are not going to de-escalate, and I'm going to show you exactly why. When we talk about the China-U.S. relations de-escalating, the whole thing is about trade. Will they be able to open up trade? And I can tell you right now, this is the first article. Japan's government is going to spend upwards of $2 billion helping its multinationals leave China because they do not want to be there. They want to bring everything back because they realized it was not a pretty good idea to leave manufacturing in China. Japan's decision to help companies source elsewhere, a timely and expensive endeavor after multinational corporations that have made China their go-to manufacturing hub for decades come at a time when U.S. companies are leaving too, even though there is no official push to do so. And so here's the thing. When you have everything in China, they pretty much have a lock on it. And they're like, look, we have the cheapest prices. Everything's here. Just stick with us. Everything's good. And we saw that that's not necessarily what's good for every single country. Now, this last part here, when there is no official push to do so, well, just today, yesterday, May 17th, this was a report by Reuters. U.S. mulls paying companies tax breaks to pull supply chains from China. U.S. lawmakers and officials are crafting proposals to push America's companies to move operations or key suppliers out of China that include tax breaks, new rules, and carefully structured subsidies. Interviews with a dozen current and former government officials, industry execs, and members of Congress show widespread discussions underway, including the idea of a reshoring fund, originally stocked with, get this, $25 billion, to encourage U.S. companies to drastically revamp their relationship with China. President Donald Trump has long pledged to bring manufacturing back from overseas. I remember that as one of his pledges. But the recent spread of the coronavirus and related concerns about U.S. medical and food supply chains' dependency on China are turbocharging new enthusiasm for the idea in the White House. So if you have Japan doing this, you have America taking, which I guess would probably be taking the lead now. I see it as a domino effect of happening all over the globe and people going, you know what? Or nations saying, hey, we're going to bring things back into our own country. And here's my thoughts. It's going to happen. I think it's going to happen, especially in an election year. That's a powerful message to send out, and especially if you want to shore up the voters who said, hey, we lost a lot of jobs, we want our jobs back. Well, manufacturing is coming back, and we got a $25 billion war chest to do it. If he does this, and he comes through, I think it'll be a big boon. And to me, I see it as a history lesson, just like the 1929 FDR New Deal programs, like infrastructure. And if he does these types of things, it's going to explode. And let me explain to you what I'm talking about. So let me scroll up. So the New Deal summary. The New Deal was an economic policy FDR launched to end the Great Depression. Americans battered by 25% unemployment. Does that sound familiar? Dust Bowl, droughts, and 4 waves of bank failures. New Deal was a series of large-scale relief programs and reforms FDR implemented to counteract the economic effects of the Great Depression. And here's the other thing, economic effects of this pandemic. And it's debatable. I don't want to get into it if this is a plandemic or a pandemic. It is what it is. The New Deal advocated government spending as a key economic driver, boosting consumer demand. New Deal played a significant role in countering the Great Depression, revitalizing the U.S. economy. FDR's new plan revealed just how vital the government's role is in the management of the nation's economy. And it's amazing that we see that what's happening now with the Fed and Jerome Powell saying, look, we're going to step in. We're going to do everything we can because we are going to stimulate this economy. And that's what's going on. FDR launched a new deal in 3 waves, 1933 to 1939. And here's the best parts of it. The Emergency Banking Act, which this act allows banks to reopen once examiners found themselves to be financially secure. And I see this as not as opening up a bank as far as like examinations for the bank, but I see it as things will open up as far as health screening when people get examinations for health, and that's why you see everybody getting the nose swab and the temperature and the antibody test. Once we have that, then everything opens back up, just like the banks. The Government Economy Act, which is March 20th. The act cut the pay of government and military employees by 15%. It cut government spending by 25%. So this will never happen because I do not believe that any person in government will ever take a pay cut, even though they all should. But that's just my opinion. But that's what happened back in 1929. And I tip my hat to everybody who was around then that did that action. The Beer Wine Revenue Act. This allowed for the passage of the 21st Amendment, which ended prohibition. And I can see this happening with marijuana. We've talked about this before, where if you look at Colorado and Washington State, they've produced an enormous amount of tax revenue from legalizing marijuana, whether that be for medical reasons or for recreational. Doesn't matter. If you can just do one of those two things, the tax revenue you can generate will help out each state. So why wouldn't they do that? Look, as you guys have known before, well, I'm still an RN, a registered nurse, but now I just do my online businesses and Amazon selling and things like that. But when I was a nurse in Texas, I had a bunch of patients who were using marijuana, and it's the greatest. I'll just be honest with you. People who have cancer, people who have chronic pain, it is way better than all that opioid junk that all these pharmaceutical companies ram down their throats. And I can only say that I don't smoke marijuana, but I can definitely see the reason for it being legalized. Okay, and here's the big thing. Civilian Conservation Corps. The program hired 3 million workers over 9 years to conserve public land. They planted forests, built flood barriers, and maintained roads and trails. And this was a get back to work type of program. And I can see this definitely happening, especially because President Trump already talked about it. He said, look, I want $2 trillion for an infrastructure package as part of the coronavirus response. This is back in March 31st. So if you have all these things coming together, then it could definitely jumpstart the economy. Let me know what you think in the comment section. That's just how I see it. And then lastly, sadly, the abandonment of the gold standard. FDR stopped a run on the precious metal. He ordered everyone to exchange gold for dollars, and most people did it, but some didn't. But I see this as kind of like the cryptocurrency digital asset standard. Right now, there are 23 bills being talked about and being put forth into Congress to vote on them so they can actually be passed. Now, all these 23 are different aspects of digital assets and cryptocurrency, but you're going to see rapid advancement, and I think it can only do good things. So this is why I think that the economy could actually do quite well, depending on certain factors. Let's go back to the vid and finish up. So finally, we're going to talk about just Mohammed's final thoughts about where this could all go, and it's pretty interesting.
In a synchronized manner. That's what you were going to talk about, Phil, about how synchronized is the pickup. If you feel confident about one of these 3 things, yes, this market goes higher. I don't right now. I would like additional evidence. And that's why I think the up in quality is a better bet right now, given the uncertainties, than simply going for a higher index overall.
I mean, we've been flat turning around for a month, but prior to that, the market was up 30%. I mean, that's 3 good years.
And prior to that, we were down even more in terms
I understand that. But if you're just stuck down at the lows when the market was down 35%, I mean, there was a time to stop being bearish. And that
there was a time when I personally, when I said up in quality and bought them, they went up 54%. Yes, there was a time. Yeah. The question is,
and I'm just asking, do you think we're going now back to a Mike Wilson 3,000 to 3,250, or do you think we're going back down to 2,500 on the S&P?
I think you're going to see volatility continue to go up around a downward trend, absent one of those three structural breaks.
Okay.
So this is something that you have to update on a daily basis. Meanwhile, if you're up in quality, you get a lot of downside protection, and you still get a claim on the upside.
So that's it. I can see that, how there could be like a negative or dropping piece, but high volatility, and it has to be updated on a day-to-day basis, especially what's going on. I think that's why you watch these videos. So lastly, I just want to say this, and I'm just going back a little bit. Everything that we just talked about, and the reason why I bring different people into this or different discussions is because I don't want to make the same mistake that Peter makes, which I think he has such dogma for gold that I don't want to have just this dogma for cryptocurrency and you should only do one thing, you should only invest in one thing. I just don't see that as the right way to do things. And that's why I diversify. I try to get, like we had Paul Krugman, we took a listen to him, and people did not like Krugman as far as the economist goes. But I think you have to get information from all different sides to make the best decision. So to make the best decision, we need to get the best info out there. And trust is the only currency you can't buy. And that's why I try to get the best that I can possibly get. All right, let's move on. So next up, this is from Daily Hodl, and talk about Bitcoin platform Bakkt boost institutional investors base, tests Starbucks integration. I thought this was pretty fantastic because we're always talking about, hey, wouldn't it be great if we could use Bitcoin to buy Starbucks? Well, apparently now you can. And this was a tweet from Bakkt, and they said, hey, look, open your Starbucks app account, settings to see our first direct integration, and select Bakkt Cash. So you got Apple Pay and new payment, Chase, PayPal, and Bakkt Cash. So I'm like, well, that's pretty amazing. That's what I like to see as far as mass adoption. So the thing is, so what I started to think about was, well, what is Bakkt Cash and what is Bakkt? Because I got to tell you, I was pretty disappointed in Bakkt because of Kelly Loeffler. She was the head of Bakkt, and then she got pegged to be the senator for Georgia, and she filled in that spot when somebody became sick or died. I forgot what it was, but she was only there for about a year or so, and then she got busted, or is in the process of getting busted, for insider trading, which was just so stupid. I don't get it. You know, if you have that much money, I guess greed begets greed. Who knows? But anyhow, I thought that she was a great person to go in there and like educate all the senators and congressmen and women about how great Bitcoin or cryptocurrency digital assets could be. And then she does something like this. So kind of depressing. However, good news is that nobody is bigger than their company. And this was from the Bakkt blog, and it was pretty well written. This is from Adam. This is from today. And it talks about, earlier this year, we acquired Bridge2 Solutions, a leader in the loyalty space. The suite of enterprise loyalty and Marcha products has powered the redemption of more than 1.5 trillion points, helping companies put loyalty points to work for consumers. And I'm like, what's all these then? What's going on with this? Because I don't have the Bakkt app, and you can't actually get it right now. But just real quick, the Bakkt app itself, this is what it does. So all your crypto, you can have it on there, your in-game rewards and cash, digital assets, all your different rewards that have been built up that nobody seems to ever use. Like I've had credit cards where they give me certain points for like Disney or something like that, and I'm just like, I'll never use that. And now you can just take those, even like gaming type of in-game assets, and put it into Bakkt and transfer it into actually usable type of funds, which could come back into your Bakkt Cash. So I'm like, wow, that's pretty great. All the different things that we could use that are not using can now be funneled into these types of solutions. And I understand now why they partnered up or acquired Bridge2 Solutions. Makes total sense. So great job to them. Moving on, it says we're also unlocking digital assets for institutional investors and have onboarded more than 70 firms to the Bakkt warehouse. If you're not familiar, Bakkt warehouse is where they keep everything in cold storage. And they said this commitment to custody is underscored by a new collaboration with the digital asset risk transfer team from Marsh. Beyond the $125 million of insurance already in place at the Bakkt warehouse, that's a lot of money, customers can now purchase more than $500 million in additional insurance coverage subject to underwriting criteria. So if you're an institutional investor, this is music to your ears. You're going to do all the work for us. You're going to store it all, and we can get additional insurance if we need so. need some because we've heard about these hacks and Bitcoin going out. They're like, yeah, sure. Sounds good. Sign me up. So one thing's for sure. Bakkt is laying the track for the institutions to come in hard and heavy. And if I could say it once, I'll say it again. Institutions are already here, and they are going to make a huge splash moving forward. You got Fidelity Digital Assets with $2.5 trillion assets under management. You got this little place called Ameritrade with $1 trillion. You got even like these big gold bugs like Van Eck, which in January 2020, they said, hey, Bitcoin is far superior than gold as far as a store of value. And they're huge gold bugs, and they've got 49 billion assets under management. Then we've got our friends over at Grayscale, and they pretty much just laid it out. They go, look, we've got 2.2 billion assets under management. When this was written, now it is 3.7 billion. This was in Q1. They went up 1.5 billion in no time. Amazing. And they said, look, the first quarter, 88% of investments came from institutional investors, dominated by hedge funds. In the last 12 months, it was just a measly 79% from institutional investors, dominated by hedge funds. And speaking of hedge funds, you've also got the Tudor Group now with 21 billion, and Paul Tudor Jones coming into and saying, hey, I'm going to invest into Bitcoin futures, and that just brings everybody else in. So if I say it once, I'll say it again. This is going to be great, and I think it's a catalyst for institutions coming in. Remember, 2017, when we had that huge, massive parabolic bull run, that was on vapor, I feel. I mean, it was just white papers and ICOs and nothing really, and retail investors, and institution was kind of there, but kind of playing dirty in the dark. I think this next one's going to make 2017 look like peanuts, but that's just my thought. Let me know what you think in the comment section. Am I way off base, or do you think, yes, it could happen? All right, moving on. He states, furthermore, we've recently completed a SOC or SOC 1 Type 1 examination by KPMG and a SOC 2 Type 2 examination by the ICE infrastructure and enterprise-wide functions that the Bakkt warehouse relies on by PricewaterhouseCoopers. So two things here. First of all, PricewaterhouseCoopers is a major corporation, and they are big into the auditing scene as far as other financial services. So when they are involved, it is a great thing. And next, the ICE infrastructure. Just so you know, Kelly Loeffler, her husband, is the president of ICE. And so there is big money in play, and it's all pretty much interconnected. All right, moving down. As we drive towards the launch of the Bakkt app, we're already unlocking the value of digital assets for consumers, merchants, and institutions, which I would call the trinity of investors. And whether it's airline miles, credit card points, or cryptocurrencies, our products are making digital assets more accessible, useful, and trusted. And I got to tell you, when I saw this, when I read this, I'm like, that's amazing. But when I went to go sign up for the app, I just said to myself, this is what mass adoption looks like. And I can see it happening. I mean, you've got a perfect digital wallet, and not a perfect, nothing's perfect, right? But I mean, you have your crypto, your rewards, your in-game, your cash, everything that you need is right there. Here's the thing about people. We're lazy. I'm lazy. I don't know about you, but I get lazy. And when I can have things like right there all together, I'm going to use it because I can't buy time. So if I can optimize my time with having everything in one place, I'll do it. And, even if I have a problem, with like hacking and whatever else, I like to save time. That's all I'll say. And then you can see here, deposit from your account. You added coffee company to rewards, send cash to David Jones, bought Bitcoin. So now you're looking at things like Venmo and sending money and sending cryptocurrency and doing everything over your phone just as easy as you would with a Zelle or with a Venmo. Loyalty redemption, like we talked about, all the different rewards that you don't ever use. Now you're like, okay, now I got a way to spend this stuff because it's worthless to me. And you can also do crypto trading. So, I mean, you pretty much got it all locked down. Congratulations for them. And we'll see how it works. Now, the thing is that this app is not available, but you can sign up at the very bottom as far as to be notified, which I have already done. I will link this in the description so you can check it out. And that's it for today's video. Look, I know that went a little bit long, but when I saw all this, I mean, if you put it all together, and hopefully you stayed here for the whole video, I got to tell you, I'm thinking to myself, I need to increase my dollar cost average prices that I'm actually putting into cryptocurrency. So if you don't know, I don't trade, I don't leverage. I think that's just gambling. I used to live in Vegas, and I can tell you what gambling is, and that's gambling. So I just dollar cost average every week. I put a small amount, between $25 and $100, into my most of my, I will say, cryptocurrency assets, digital assets, and that's it. And that's all I do. And I think now I'm going to actually increase that number. So that's it for today. Before we take off, let me make mention to my wonderful supporters. Thank you so much. If you don't know, there's a little join now button underneath all my videos. And when you click the join, there's two options. You can sign up for, it's a couple bucks. You get level 1, a little bit more, and I give you a shout out. Now, there is no, I don't hold back any information. I don't have it like, well, this is for members only, and this is just for you, regular folks. I don't hold anything back. It's kind of like a tip. So if you want to do that, hey, fantastic. Helps to support the channel and me, and that's awesome. So level 1, love you all. Thank you so much. And then level 2, I want to give you a shout out. All Right Soft, the original OG, the first to do it. Thank you. Myself, who else? Dave Plummer. Whoa, what happened? Dave Plummer, the straight talking guy. Check out his YouTube channel. Good stuff. Grant Sharman. And then we got some new ones. Bruce Wood. It's a great name. Baking Benjamins, which is probably the 3rd best handle as far as subscriptions. Right next to Wen Mullet and who's the other guy? McLovin. It's funny. So Baking Benjamins, they're also bakers for the Tezos Network, I believe. New ones, Noel Flippin' Vegas and Martin Lewin. So hey, I appreciate everybody. Thank you so much. So that's it for today's video. If you like those videos, there's gonna be 2 more that's gonna pop up on your left and right. Don't know what they are. They are selected for your viewing pleasure by YouTube. And that's it. So thanks a lot. See you on the next one.